I check. Can you guys hear me? Okay. Good morning, Luce. CPI day, guys. CPI day. Volatility Central. I have about 3 minutes. For anyone who doesn't know, I'm using the recommended H1 order block open price here. It's CPI, so I'm open to the idea of them wanting to reclaim the level. So go through the level and then come back and then print something there, instead of just being a stickler for perfection in an environment where the volatility is to the roof. So M1 here, should have put the indicator on the M1 chart too, but I didn't.
Good morning.
Well, good morning. With the level on, which is this black line, I still haven't gotten around to refining the code to do that just yet. So for now, it's just printing the entries and potential targets. I need to find a way out to, I think I know how to do it. I got some advice, but just haven't gotten around to it yet. I didn't think it was that important. So I know this is the H1 OB level. I want to be able to see that level here, or just fix it to H1 only and then go to a lower time frame and then load up. But like I said, it's not that important. Not that important yet. Here it comes. Here it comes. Do we just run away, or does it come back to the OB and tag it? Or do we sweep below? Either way, I'm planning on making money from shorting after Monday's high staking. So I'm really chill until that happens. If not, then okay, next week again. This is the H1 order block I was using for long setups yesterday. Just have that body on, just in case we hesitate. All right, so here comes CPI. 3, 2, 1. Majestic. Okay. I saw the M1 fractal here. Wanted to check if the indicator printed. No need to change time frames. First 5 minutes of the CPI data. No need to change your plan or change anything. It's just a little early this morning. But so far looking nice. Now that they are forward testing. Absolutely mechanical. Entry. Logical stops. This is not a target because it's already swept. I haven't discussed targets with you, so let me not start that conversation now. But 20, 30, 50 points should be mechanical enough. 401, 450 just got crossed, so that would have been a 50-point setup. Still need confirmation of air quotes bias. So we're still in the 8 o'clock candle. Let's see if 9 o'clock retraces and then a buy setup should be nice. If it does retrace, I'll be looking for two things and two things only. Sweep off all of this or all of these lows, followed by reclaiming that level to print a setup, or retraces to this and then start printing M5 bullish setup. But this guy here, we need to show willingness to destroy this body, or it's violated. If it runs right through, pulls back, that's fine. But rejecting it immediately, that's a no-no. That's a no-no for higher prices. So here on M1, we can see it hit the 50% of the body here. Rejecting, we don't want that. That's all we want. Disrespect of that level. So admittedly, I am not in that long setup because it's CPI, but it's really nice to see a mechanical, air quotes, mechanical model showing up for work. So I'm allowing the first 5 minutes, show me what's up, and then I go back to waiting for an idea to trade. So if in that after that 5 minutes, if you have questions, that would be the best time to knock them out. If not, you know the levels, you know what to look for. I trust you'll be able to make your own decision. But I want to see that M5. More than anything else, I want to see that M5 candle. First 5 minutes of any volatility driver. Instead of trading it, use it to check what it's doing. Is the stop run? Is it breaking market structure? Air quotes breaking market structure because that's always debatable. Or is it wiki and not showing any commitment? Personally, I'm interested in trading the 9 o'clock H1 candle. But I'm just watching this because, you know, see if the stage is set for me to perform. I plan to be very naughty, Voodoo. if she behaves. I'm curious what the 30-minute chart looks like though. Curious. So we had, this is something I was telling the guys yesterday that I am creating a rule set for this because logically these things print over and over. If you have a higher time frame, I'm assuming somebody's going to try to code this on their own before I give the indicator out. If you have like the H1 saying higher prices, every time lower time frames say sell, look at it like a retracement, and then scalings. But yeah, let the data tell us. I want at least 2 months of data collecting with this before I give it my blessing in terms of mechanically trading it alone. Just H1 air quotes bias and then M5 setups. First M5, beautiful, wreck that 50 level of the H1 candle, which is what I want to see. So now, as we trade into this last half of the hour, I'm open to the idea of retracements, but I want to see about this level and this level. Show me something that says, hey, we're allowing price to go through. Anything that comes back down is a retracement. So far, I've gotten that. All good. I got the long. It was naughty. I wonder where you got in. Nice. I see you. You went late. Oh, that wick was your entry. But still nice. Mechanical. I love it. Partial break even. I know it's all chill. So for I guess anyone who don't have a question now, we'll end the call here. not much discussed besides the fact that you know what the model is already printing the indicator. It's not yet available because I'm not going to give you something I don't trust. So I'm stress testing it. Stress testing, however, is beautiful. I can admit that because I stress tested across every pair here. Literally every pair here. Key levels jump out. Entry setups jump out. I'll use H1 so you can see H1 narrative in play. When you go to M5 or low, you're using this to get in this narrative. So yes, this is a nice sell. Yes, this is a nice sell. But see where it's pointing to buys? Those are the levels you pay attention to. So when you do get this, please keep that in mind and don't say I gave you something and told you that it's going to give you trades and you're losing money. Yeah. AU, again, here's a sell setup that would have been a losing trade. What does the H1 say? H1 says look for buys. That would be your key level. This is not something you'd be in. You have to be fine with that. That's a rule I'm implementing because it will print buy sells everywhere every time the fractal prints. But you still have to have rules. Like I said on Twitter a couple days ago, your rules are not for the market. It's for you. Dollar index, beautiful buy. Here again, sell, 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 sell. So if you notice, it's given multiple setups, scale up a time frame. H1 sell, or the last thing on H1 was a sell. So on M5, people look for another sell setup. Here's a sell, here's the entry. Ignore anything that goes against the H1. This is the key level. You're on lower time frames, you're looking for your fractal there. You're not trying to buy everything or sell everything and then telling yourself that, you're frustrated. H1 direction, allow the M5 to print the key level and allow the setup to print at the key level. That simple. There you go. So mechanical stress testing, Euro USD, H1 says buy. You drop the M5, you look for a buy setup only at the buy key level. Buy key level in the morning, hits it. Order block meets big down candle or any down candle, propulsion candle. You extend that out. Propulsion candle, propulsion candle. See, this sell is not a sell. It's a retracement to your key level. Or maybe you'd miss it if you're thinking this is the key level. There's nothing wrong with that. You have to read price in a mechanical fashion. Order blocks that are held, or bullish order blocks that are held by big down candles, projection blocks, or projection candle, propulsion candles. Use them. So this becomes your order block unless it trades through. And in this case, I wouldn't expect it to trade through. Don't ask me why Euro USD is here. I don't trade EU, but stress testing. Bitcoin, last signal was a buy on H1. You go to M5, you're looking for buy setups. Buy setup, buy setup. This is a retracement to your buy setup. Doesn't get more mechanical like that. It's very hard for you to not follow the rules when it's that simple. Last signal on H1 is a buy. You drop the M5, you look for a buy fractal. Buy fractal, buy fractal, buy fractal. This is a little bit misleading. I don't want you to think that you would be in this unless you're buying based on this. Okay? Because this is printing after this candle closes.
Yeah.
Yeah. So this would have been air quotes entry, but I think it's delayed. Yeah, delayed. Just showing you mechanical approach. Last thing here is a sell on M5. Where's your sell setup? No sell setup, you're not in a trade. Simple. Don't try to go and try to figure out something here. Unless you're not into mechanical. Same thing. Last one was a buy. This is the idea I'm playing around with using green lines and red lines. Green lines for lower time frame targets. And then, yeah, you get it. So M5, looking for a buy setup. This would be very nice. This would be very nice. This looks familiar, like it's the same thing. Yeah, the same thing. Not bad. Moving on. H1. This would be a sell. So this would have been a losing trade because on M5, I doubt there's any sell setups. No sell setups unless you're short way over here. And then this one we already did. So pretty mechanical in my opinion. Pretty straightforward.
Sorry, can I ask a question, please?
Sure.
So if we have instances whereby we have, let's say, more than 4 or 5 candles that are pointing, say in a I'm trying to look if I can, okay, yes, something like that, yes. Where do we start counting from? And do we just use the last two that is presenting, or do we start counting from from left to right as it's pointing? Or if I'm, for example, so like, yeah, that would be the question.
Okay. So I've been on a giving spree this week. So I'm going to answer that question. This is something that I expect you to know. I'm assuming that you're in the Discord, right? If not, then that's my assumption. Failed expansion is a logic that I taught some time ago, okay? Without this, I can take the indicator off, and using failed expansion logic, I can point to the exact price level where I want my setup to form, okay? The exact price level. What he said. Kidding. So this model that I gave you is built around two specific fractals, two very specific fractals. Number one is a failed expansion, and number two is a displacement. Those are the concepts that were used to build this idea years ago. I never put it in an indicator because I couldn't code, but now I've been learning to code, so I've been playing around, right? Those two ideas will tell you that if you look at this, where did the expansion fail? Anybody who knows where the expansion failed in this swing, point to it, please. Just so it's not. I want to check if it's understood from the guys who should know versus me. There we go. Exactly. So the expansion failed here. If this is your failed expansion, then the open price you want to see the market close above is where? There you go. Market close above it right here. So you know, or you should know, your entry setup is going to print right there. Your entry setup is going to print right there. I'm not telling you the market is going to expand from that price because that would be lying. Your entry setup should print there. What's that setup going to be? I don't know. We're 99.9% of the time they're on M1. Here's M1, and this is the price swing that traded and closed through here. Can you see something here that's very, very mechanical? Or something that's easy to follow? I can see a million things. There's a fib from the swing low to the swing high, 50% of that swing. We have expansion here, multiple FEGs. The rule for which FEG to use has been preached for years. There is sell side liquidity here. There's a new delivery here. There's EO low here. There's so many things here that so many persons can use to get in the trade. But knowing that it should print there, I mean, this is 420 and this is at 418. If you enter anything here and you see the market wick like this against you, at what point do you consider yourself wrong? Here. Why here? That's the swing. This portion is efficient. We have back and forth price action here. Then we break above, break away gap. I don't know if I'm leaving out the filler words and it's not understood. Here, you're expecting the market to break above here, that red line, because that's the order block. If at any point in time you're looking at an expansion and you're thinking that the market should expand through here and print a breakaway gap, and it puts a FEG there, isn't your first expectation that that's the FEG or that's the breakaway gap? So everything you want is going to print inside here. It's one of the reasons why I wanted to watch this live versus send you a chart. Everything that you want here, let's take this red line off because it wasn't a part of the analysis. Everything you want here in this setup is there. Okay, you have your key level here. So look at this as the range low. Just for bands. Think of right here as being the low of the range. You wanted to see this act as the low and the market trade higher. What did we have? An expansion through here. In an expansion leg through a pool of liquidity, the FVGs in that swing will frame your market structure shift. Easy. What does that mean? It means pool of liquidity, market expands through, just find the FVGs in that expansion. There it is. You're watching the willingness to put bodies above that, in this case, since we're bullish, or below that. My bias or my draw here stays the same. With or without this fractal, I'd be bullish because I mentioned, I just don't trust Mondays being high of the week. It doesn't happen a lot. So if it means my buy setups are going to get cut short, then yeah, I'm fine with a rules-based loss. So the moment I look at this, the only thing that makes sense, the draw on liquidity, the level you want to see it close above, confirmation for higher prices. That's it. It doesn't have to be complicated. It doesn't have to be a million things. Outside of that, it's just mile markers. If this is bullish, these are the things that the bullish delivery will print. Close above swing highs. Breakaway gaps when you're expanding. Old bullish or old levels should be reclaimed. If there was a level you didn't want to see the market close up below before, then it ran below it. Now that we start expanding back up, those are the levels that you have to watch. So that's why this H1 body is here. In particular, the M5. Hey, what's up? Grandma? So that's why I have this. The graded portions of it are less important, to be honest. I just like it for targets when I'm looking at big swings. But that 50% is going to be your killer. Let's see if I can get 2 more questions in the chat.
Thank you so much.
So that's coming on model. Yeah. So trading is not the easiest thing in the world. Maybe it is, right? Just buy, you just sell. But there are a couple of things that makes it harder than it should be. One of them is just plain fractal, not fractal, like pattern trading approach. And yes, this is a pattern, but it's not based on just higher highs, higher lows, and stuff like that. It's a logic. It's presented as 2 down candles close above, and that's it. But that's just to spare you the unnecessary goobla. For the guys who've been with me for years, fail expansion is something that you should have known. This is a fail expansion right here. Whenever the market fails to expand, for simplicity, I have 2 rules. One, on M5, this is M5, on M1, I'm either going to get an order block or a rejection block at that blue line. It's that simple. We go over there. I'm looking for the low. Here's the low. I want an order block or a rejection block here. We close below the level. I cannot expect a rejection block anymore. So I have to look for an order block. Grab that candle that closed. There. That's my order block. That order block has distinctive qualities that I like. The key level is being ran, and there's a big FEG inside it. So once we close above that FEG, everything I know and love is going to come alive. Here, there's that FEG again, breakaway gap. You buy that. Comes back. I don't know if you should buy this again, but you buy this. You don't have to hold all the way up here. Multi-time frame analysis is just a cheat code, to be honest, instead of being confined to one time frame. See, that's it. When you understand this logic, I don't trade second chart. I don't have anything against persons who do it. I just don't think that I need to. Transpose that to any time frame. You could look at H1, look for H1 failed expansion. Here. So this becomes your key level. So if 8 minutes and we close below here, then we're going to probably get a deep retracement. If we don't, then I'm expecting this to just continue. Simple. That's why I frame key levels, and then I do the responsible thing of stocking my setups around that level instead of praying and hoping. The praying and hoping comes after.
If I can ask a second question, sorry, this H1. So after that failed expansion, price still went down, and the last two, if I can maybe annotate, this two candles still from an expansion. Can we start another delivery from there, or we just hold on to the from the first two, from the one above? I don't know if you get my question.
I get your question. I get your question. So let me ask you a question first. If you're looking at like order blocks, only order blocks, and order block prints here, market doesn't get above it, right? Or, well, that shouldn't be the case, but let me just put it like this. If you get a down candle that you expect to be an order block and the market does not go above it, and we go lower instead, and another order block prints, then it goes lower instead, and another order block prints, and it goes lower instead, and another order block prints. How do you frame which one to trust? That's essentially what you're asking here.
Yes.
Simple response is,
Exactly.
when you look at the fractal that you want to trade, the fractal should point to a key level. In this case, or this case, clear key level. You want to see close above here. In this, you want to see it close above here. Trying to trade inside here is simply your impatience. You have to accept it. It's not a bad thing, but you have to know that unless I see the market expand and go above here, I'm rushing. Sometimes I want to rush. But it doesn't have to be a bad thing. Like sometimes I trade Asian, sometimes I trade early New York. What stops me from getting it wrong in either of those times and then blowing up? Simple risk management rule. If I'm trading New York, I go aggressive. If I'm trading Asian or London and I feel like going aggressive, the positions are significantly smaller. Those are more for reminding myself that I can trade any session. And sometimes they're like small mile markers. I do. I don't know if you guys do that. When you trade full time, sometimes you have to reward yourself so that you don't suffer anhedonia. If you don't know what that is, Google it. Set a small goal, something small. You want to go do something? I'm going to do this. Small goal. I'm going to make $5,000, something like that. Just set some small goals and then try to do it as mechanically as possible. So Asian and London trading is usually like that. 2 weeks ago, I said I wanted a new TV. You saw me trade every single session of 3 days. I didn't tell you that, but that's what it is. So small thing like that just keeps you enjoying what you're doing, and it doesn't get like textbook boring. Just make it fun for yourself or teach someone. I told a few of my friends recently that my mom came home, saw me trading, and she's always heard about me trading, but she's never seen me trading. So I gave her my phone and I managed to trade on the PC. And I had her watching the P&L because that's all she is interested in at the moment. Just had her watching the PNL, told her what we're gonna aim for, where we were gonna get out, and it was just funny watching her reaction to the wiggles and the retracements. So, and that's not a big thing, but those small things make trading fun for me. So I just find ways to make it fun. Could you explain London's narrative? I could, but I can't explain it through the lens of what I've already shared. If I'm realistically trading London, apart from this model, I have other stuff that I would use. I have like a million indicators that I built. Some of them are strategies that I'm planning to make into bots, but nonetheless, the one for London has stuff in it that I haven't talked about, and it would be unfair to the guys who I'm planning to give it to. Now you made me disclose that I have something for them. Peek into the cycles. The best way I could say to trade London, if I was forced to trade London, first thing I want to know where 1 a.m. open is. So I'll wrap up this call. So this is what, Wednesday, 1 a.m. If I'm trading London, I have to know where this price is, because as far as I'm concerned, trying to get open there. As far as I'm concerned, trading London means trading the efficiency of the delivery around that price. So M5. I feel like sending. Why am I in London? There we go. The open goes up, inefficient. It goes through. The moment this candle prints here, that range is efficient. So that's your London range. You fib it, and you're looking for your entry setups, if it's efficient, around 50%. If it's inefficient, you're looking for a run on the highs or the lows. That's it. Literally that simple. Yeah. When you get past that and you move into M1, and you could see the deliveries forming. Opens, runs up here, comes back down. Watch the lows that retraces to the open. I'll try to say this as slow as possible. When you're tracking the efficiency of a range and it's one-sided since they open, watch the retracements, and if they get back to that open price. If they don't, it means there's an inefficiency between the lowest lows that retraced and the open price. If it's one-sided and inefficient, you need bodies there. This is one-sided to the buy side. There's an absence of ... candles inside here. Wham. No more absence of ... candles inside there. Your range is now complete. Your range is now efficient. Everything you need to trade from this point on, from 2:10 a.m., every single thing you need to trade is available right there. I'm getting a little bit carried away with this, but let's do this. Most basic approach. Highest body, lowest body. This is the most basic approach. If I'm looking for price to expand and retrace, it should happen at deviations of this. How do I find that deviations? Simple. I'm going to pull this box down until 0.5 overlaps with that body. There. I'm going to stock a buy setup right there, or I'm going to short and target there. Amen. It hits it. There's no bodies. Rule says if there's no bodies in the run to a key level, use rejection blocks for your setups. If I'm right here at 237, how do I find a rejection block? Big question. Where is the last pool of liquidity that was rated? It's on the left. That's the hint. It's on the left. Here. If a rejection block is going to print, it's going to print at the lowest body inside the liquidity pool. This line here is already framing failed expansions. I'm going to remove it and put that the lowest bodies there. That's going to be a rejection block. Right at that price level, after this run is done to your key level, your setup is going to print. What's it going to look like? I don't know, and I don't care. You know, order blocks, you know, OTE, you know, dealing ranges, you know, every single thing. So just look for one of them right there. Once it closes here, 244, you start stocking. FVG order block, somebody's going to look at that. Zoom logic, if you are 4 or 5 years into TCM. Zoom logic, this kind is open price. When I point to this kind of open price now, somebody's going to say, wait a minute. But this call is getting too long, and I'm not trying to distract you from trading today. Plus, should be enough to sit and think about. And then, so with all the love in the world, wish you guys a very productive rest of your day. I had a line, forgot it. Yeah, just like and subscribe, I guess. I forgot the line. I forgot. Yeah, I'm gonna post this. I'm gonna post this. I'm going to, if you don't see me online much, I'm going to be tracking and journaling the results of the bot here, making sure that all the rules are being observed. So when I push it out next year, everybody is comfortable. You don't need confirmation from me to push a button, because retirement cometh. Just don't hate me. Don't hate me for retirement, but I'll be here. Yeah. Nuggets every day until Christmas. All right, let's make it a party. Let's make it a party. Every day until Christmas. That I can find the time, importantly, when I have a short call like this. And yeah. So again, enjoy the rest of your day, guys. And see you in the Discord.